Hey traders, it's John Fortune here of this week's Weekly Forex Forecast for the 26th of October to the 30th of October 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets we're going to be looking for in this coming week and also for the weeks ahead. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we had a neutral bias on the dollar index. It meant that the dollar index was in a corrective mode, and as a result we were trading the markets on their own merit, so how they were structured without a strong bias in the dollar either to the upside or the downside. We did break that correction last week and we started to trade to the downside in the dollar index. So very simply put, it looks like we're starting the next leg down. We have this clear corrective wave back, and now it looks like we are not only forming this head and shoulders, but we also broke the confirmation point, which was right here last week. All of this points to further declines in the dollar index this week. We are looking for further declines down to the 91.99. So any correction in the dollar index, we're going to be looking for a decline down towards the next key area of support to the downside and the target set at the 91.99. And what this means is that we go into this week with a bearish bias on the dollar index, and it means we're going to be prioritizing dollar weak positions in the dollar pairs next week. So the next market we're going to look at is crude oil. We are still structured to the upside in crude oil. It is quite choppy, so this is something to think about next week. I'd prioritize markets which aren't as choppy. This would be slightly down on my list, although I would be preferring to look for bullish setups in this market next week, because if we get a weaker dollar, this is going to help lift crude oil to the upside. So any reversal pretty much from where we sit now at the 39.50 is going to be viewed as an opportunity next week to start to look for bullish setups. And if we can break out here and we start to correct, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at 41.96. And if we can get a break through here, we're going to be looking up towards the next key of resistance, the upside and target 2 at the 43.71. So next market we're going to look at is euro dollar. Now, last week we started the week right here, and we noted in last week's video that this was an area to start to look for a rally to the upside in euro dollar. We didn't quite come and test the key area of resistance, but we did have a really nice reversal to the upside. We broke out and we had a really nice rally up towards the target, stopping fairly short of the target last week. Very simply put, for anybody not positioned into this from last week or not involved in euro dollar, we haven't reached the 1.1919 yet, so any correction once again back towards the 1.17180 is simply going to be viewed as another opportunity to look for bullish setups. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1.1919. So next market we're going to look at is pound dollar. Now, last week we highlighted the 289.50 as a key area of support to look for a rally to the upside in this market, and we started the week right here. And we highlighted the 1.31750 to the upside as a target, and you can see we had a really nice rally last week in pound dollar, taking out the target almost to the pip, and then we started to sell off as profit taking came in. So very simply put, going into this week, we have started to correct back down towards the 1.28950. Any further correction is simply going to be viewed as another opportunity to start to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1.3266. So the next market we're going to look at is US dollar Japanese yen. Now, last week we had a confirmed reversal to the downside. You can see we have this reversal pattern right here in the form of a head and shoulders. We broke this, and we actually broke this with momentum. We came through this very, very hard, this confirmation point here. Very simply put, going into this week, we are therefore looking at further declines to the downside as the high probability move, especially as the fact this has strong momentum. This is suggesting or indicative of lower lows in this market. So something to look out for next week. This is something that will go towards the top of my list, but we'll see how it plays out. Any deeper correction would be great. The deeper the correction, the better, so we can get better risk to reward on our setups. But any deeper correction towards the 105.310 is going to be viewed next week as an opportunity to start to look for bearish setups. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 103.99. So the next market we're going to look at is Aussie dollar. Now, Aussie dollar is structured to the downside, and what this is telling us is that although we have a weak US dollar, the Australian dollar is actually weaker or kind of similar. So the first thing to note is that if you're looking for other currencies next week, perhaps Euro Aussie to the upside, for example, Pound Aussie to the upside, Aussie Yen to the downside, etc., because this chart right here is showing you the Aussie dollar is also weak next week. Since this is counter to what we're looking for next week, in the sense that this would be short Aussie dollar, would be weak Aussie dollar, and long US dollar, and we are looking for a bearish US dollar next week, we can use this in one of two ways. Either we'll just leave this all together and just filter this out, or you could just use this as part of a synthetic hedging plan. So simply put, if you were to go long euro dollar with 1 risk to 2 reward, and you were to go short Aussie dollar with 1 risk and 2 reward, and if the dollar is strong, then you get paid out on your Aussie dollar and you take a loss on your euro dollar. And if the US dollar is weak, you get paid out on your euro dollar and you take a loss over here on your Aussie dollar, and you end up +1 either way. So that's how we will be looking at Aussie dollar going into next week. Just remember, you can actually get stopped out in reality on a synthetic hedge on both trades, and you can also book a profit on both trades when you have a synthetic hedge play. So just something to bear in mind. It's not a holy grail, but it is a sound form of money management if you want to utilize it. So the next market we're going to look at is New Zealand dollar. So last week we highlighted the 0.6580 as a key area of support to the upside, which was right here. And we did bounce from this key area of support, and we almost took out the target set from last week at the 0.6721. So we did have a really nice rally from support almost into resistance. If we can pull back going into this week before we take out the resistance, that would be great, because any pullback in this area is going to be viewed once again as another opportunity to start to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key area of resistance, the upside, the target set, the 0.6721. And if we can get a breakthrough here, we're going to be looking up towards the next key of resistance, the upside and target 2, at the 0.6826. So the next market we're going to look at is US dollar Swiss franc. Now last week we started the week in this area, and we were sitting right at the key area of resistance highlighted last week at the 0.91580, which was right here. And we highlighted in last week's video that this was a great place to start to look for a sell-off to the downside. We did have a really nice sell-off, and we took out our target set at the 0.90540. This was the line from last week. And you can see that was pretty much the entire move for the week once we took out this target. So very simply put, going into this week, we are still looking for further declines to the downside. We are coming quite close to the next target, so any pullback this week, preferably if we can come back and test broken support, turning resistance at the 0.91230, but any pullback will give us better risk-reward setups to the downside. We're going to be looking at initiating shorts next week in this market, down towards the next key of support to the downside, the target set, at the 0.9050. And if we can get a breakthrough here, and you can see that there is a huge gap between these two levels. There is nothing here pretty much but air. And when we have this type of scenario, a break below the 0.9050 can actually see capitulation quite strongly to the downside to the 0.8838. It could run this gap quite quickly. So just something to bear in mind in US dollar Swiss franc next week. This is one we'll be keeping our eye on. But if we can break the 0.9050, we're going to be looking down towards the next key of support to the downside and the target set at the 0.8838. So the next market we're going to look at is US dollar CAD. Now last week we started the week in this area right here, and we were looking in last week's video for a sell-off down towards the 1.3051. We did have a really nice sell-off. We took out the lows. We did not quite come all the way down to the next key of support. So very simply put, for anybody not involved in shorts or who didn't short this last week, any correction back towards the 1.32250 is going to be viewed once again next week as a great opportunity to start to look for bearish setups. And if we start to get some bearish reversal patterns in this area, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 1.3051. And last but not least, we have gold. Now last week we were sitting in this area, and we highlighted the 1886290 as an area to look for a bounce to the upside in this market. We did have a bounce to the upside, but it kind of grinded out the week. We didn't really have any explosive moves, which is what we would like to see. And we came within a few points of our target at the 1932.87. So very simply put, going into this week, you can see we're starting to pull back once again to the 1886.29. Any further correction, especially if we can come back and retest this area, is going to be viewed next week as an opportunity once again to look for bullish setups. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1932.87. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.